Okay, hi all. There are questions about the 2015 May and July entries, so I'm just going to go through them very quickly here. And so again, I've just done a kind of a mini or a portion of the tabular statement with the items that I need, the assets and the liabilities that I need. It's very hastily drawn, so forgive me. There we go. And so I'm just going to do, it was the May and the July columns that the question was asked about. So if I go to May, it says, received a bank statement at the end of May showing a direct debit of 3,600 to cover fire insurance for the year ended 31st of the 3rd, 2015. So first of all, I'm going to do the easy part of it, I guess. A direct debit of 3,600 means 3,600 was paid out. So my bank has to go down by 3,600. So I've got my bank up here. So my bank is going to go down by 3,600 actually. I better make a small space because there's something else going in here in a minute. So minus 3,600. Okay, that's the easy part. Then I need to decide, where was it again? Oh yeah, it was to cover fire insurance, which is an expense, for the year ended 31st of the 3rd, 2015. So 31st of the 3rd, 2015. But this whole tabular statement is for the year 2014. So at the end of this tabular statement, it will be the end of 2014. So if I've paid for insurance right into 2015 for the first 3 months of 2015, that means at the end of my tabular statement I will have insurance prepaid, which is an asset. Now, if it didn't already exist, which it does, we can see there was already an entry for that in your balance sheet, and so there was already an entry at the start of your tabular statement. But if it hadn't existed, we'd have to put in insurance prepaid here, but it was there already. So now all we need to do is put the 3,600 in here also. But we've got to decide, is it going to be a plus or a minus 3,600? That's the only thing we've got to decide now. And looking at what we've got already, what could I put in here to make sure I had the same total here as I have down here? Well, this was how hasty I was in drawing this. I didn't even put in the total. Okay, right. So, and I think it's easy enough to see that the answer is this will have to be a plus 3,600 in the insurance prepaid, because then the minus and the plus cancel. You have 0 here, 0 total down here. But we're not finished. That would be if that was the only entry. So now we go to the other thing that happened in May. And if you like, what I like to do is pretend then that these things don't exist when we're doing the second one. So treat them both in isolation. So we've got a credit transfer received, 8,600. So money received, 8,600. The easy thing first is to go to the bank. What happens when we receive money? Our bank account goes up. So 8,600. So our bank plus 8,600 here. Oh, that's very bad writing. 1,600. Okay. And as I say again, pretend this minus 36 and this plus 36 are not there. And now let's just decide what is our tabular statement going to look like at the end of the year. So it's for 10 months rent receivable in advance from the May 1st. So rent receivable is money we're receiving from renting some part of our business out to somebody else. So that's ordinarily a gain, but let's see what happens. If we've received money to cover 10 months rent in advance from May the 1st, that means for all of May, June, July, August, September, that's 5, October, November, December, and then January and February of next year. So at the end of the year, I'm going to have received 2 months prepaid rent. Now, a receivable prepaid is a liability, and that wasn't in your balance sheet at start. So we have to enter or create this rent receivable liability here underneath the liabilities part of our tabular statement. So we know it's going to be 8,600 that goes in this rent receivable part. Now we only need to decide, is it a plus or a minus? Well, if we pretend that these two don't exist, what would I need to make it balance? Well, there's a plus 86 here. I'd have to have a plus 86 down here also, wouldn't I? And then in total, the whole thing, if I pretend everything exists again, what will the total up here be? 3,600 minus 3,600 is 0, plus 8,600 is 8,600. And down here, well, there's only one entry, plus 8,600, but everything is balancing fine. So that's May. Then July, let's have a look at it. A delivery van which cost 15,000 and had a net book value of 3,000 rather, was traded in against a new van costing that. An allowance of 4,500 was made for the old van. So a delivery van which cost that and had a net book value of that was traded in. We got rid of it. Okay, so we got rid of one which cost 15,000 and it was traded in against a new van. We got a new van costing 24. So if we go to our vans first, and just draw a line under here so we can see where our vans one is. So vans, you could put in the 2 entries or the 1 if you like, but you'll know that if we got rid of a van which had cost us 15, then our vans should be going down by 15. But if we got a new one which cost 24, they'll go back up by 24. So the net effect of all of that is, and you might see this in the solution, is minus 15 plus 24 is plus 9, isn't it? Our vans altogether has gone up by 9 when it went down by 15 and up by 24. So you might see a plus 9 there instead. Now what's happened? Well, it also says that when you got rid of this delivery van, which had cost you 15,000, it had a net book value of 3,000. If it had a net book value, we can work out what the depreciation on that van had been at the time we got rid of it, because you have your cost minus depreciation gives you net book value. So if I do it over here, we are used to seeing this in our balance sheets. It's saying it had a net book value of 3,000. We know that it's saying it cost us 15,000 when we first bought it. So it means it must have gone down by 15 minus 3, 12,000. So the depreciation on that van at the time we got rid of it was 12,000. Well, here's the thing. We can't have any information to do with that van in our accounts anymore if we don't own that van anymore. So we used to have 12,000 depreciation included in our van depreciation section of our tabular statement. We want to take that out again, that 12,000. But the thing with van depreciation is that it's always entered as a minus, so that if we want to reduce the van depreciation, we have to put it in as a plus. So we put in the 12,000 van depreciation there as a plus, and it'll reduce our total depreciation figure by 12,000. Okay, so far so good. So delivery van gotten rid of. Okay, next thing is, if we got an allowance of 4,500 for the old van, that means that when we went to buy the new van for 24, the garage owner said, look, I'll let you off 4,500 of the cost of it if you give me your old van, if you trade in your old van. Give me the old van and I'll reduce the cost for you. So here's the thing. We need to work out how much did you actually pay? Well, if the cost of the new van was 24 and they said, look, we'll let you off 4,500 because you're trading in your old van, then the actual amount you paid was 19,500. And if you paid out 19,500, that means your bank goes down by 19,500. Okay, so that's it for the top, really. We can balance it at that. So what we've got here is, that was plus 9 in total, wasn't it? And plus 12 is plus 21, and a minus 19,500 is 1,500, isn't it? And down here, we just balance it by putting another 1,500 in the profit and loss. And we'll see why in a second. I'll just enter it first, 1,500. Well, here's the thing. We had a van which had a net book value of 3,000 euros. But the guy in the garage said, I'll let you off 4,500 if you give me your old van. So we got 4,500 for an old van that we only valued at 3,000. So it means really we made a profit of 1,500 on that deal. So that's why the profit and loss goes up by 1,500. And I would always double check. All I did there was put in the 1,500 because I wanted to have it the same as the top. But then I double checked afterwards to see if that makes sense. 3,000 from 4,500. Yes, it does. A 1,500 euro profit.